Hey Bowtie Nation, Joseph Hogue here with your weekly market update, 9 a.m. Eastern every Monday with the stocks to watch and the stock market news you need to see. And Nation, shares of Zillow surged 19% on its earnings report last week, but what I'm about to show you in this 2025 Megatrend means you ain't seen nothing yet. The housing market is about to flip, and while it could see home prices come down hard, it could also mean big profits for these 5 housing-related stocks. I'll show you how this trend has already started in Florida and Texas, when it will spread to the rest of the country, and how to invest, along with updates to stocks I'm watching this week, including Walmart and AI stocks like Palantir. I'll be highlighting some of my favorite real estate stocks to buy in today's update, but another way I've been getting upside to that rental market is through the Arrived Homes platform. The platform packages rental real estate as LLCs, so you're investing directly in the properties, but without that massive down payment or management headaches. You earn dividends on that rental income, and best yet, Arrived has recently transitioned to monthly dividend payments, so you're earning from 3 to 8% annualized and getting that cash flow every single month. Upside price returns have been as high as 136% over 5 to 7 years on each home. This is one of my favorite monthly dividend investments right now, but I know you have questions, so I'm going to link to the platform in the description, or just scan the QR code here. One thing, the homes available for investment sell out fast, so make sure you click through and get on that notification list. I missed out on a lot of good properties for not being on that notice list, so look for the link below. Back to our main topic, and I've been paying a lot of attention to these developing trends, those big picture forces that could point to the best stocks over the next year. It's this kind of proactive investing that has always been my best returns, and one trend building in Texas and Florida already could be about to go national. First, understand a combination of factors have caused the housing market to screech to a halt over the last 2 years. The Fed's fastest rate hike in 40 years caused mortgage rates to surge to the highest point in more than 2 decades, topping out at 7.8% last October from just 3% after the pandemic. A rebound in the economy and that work-from-home trend has helped push the median price of homes to an all-time high of $440,000 last year. And while it has come down to $412,000 in the second quarter, the combination of high mortgage rates and high prices have made affordability the worst it's ever been. In its quarterly survey, researcher Adam found that affordability fell again last quarter, with nearly every market less affordable than its long-term average. Interest rates more than double where they were just a few years ago means nobody is selling their home. Why sell out of a 3% mortgage if you have to take out a 7% mortgage when you move? The current number of homes for sale on the market is just 3.7 months worth of sales volume, up from the record low in 2022, but still historically low, and keeping those prices artificially high. If nobody is selling, then what few buyers can afford a home and need to buy are forced to pay that higher price. And all this has brought the housing market to a standstill, and related stocks have suffered. A chart of stocks including Zillow, Redfin, Opendoor, Remax, Compass, and Anywhere Real Estate shows an industry in trouble over the last 2 years. Only Zillow has been able to keep up with the overall market's 25% return over that period, while the other stocks have plunged from an 8% loss on Anywhere Real Estate to 46% lower for Redfin and as much as 73% lower for Opendoor Technologies. But then recent news out of the nation's biggest markets in Florida and Texas could signal that the trend is changing and could be about to flip the housing market on its head. Investor groups that rushed to buy up homes during the pandemic are now selling to lock in those price appreciation, and in the face of softening rents in both those markets. Nearly 14% of home sales in Texas this year have been from investors, an increase of 62% from the normal average investor sales. New state regulations after the Surfside condo collapse in 2021 are also hitting the Florida market, with owners rushing to sell. The number of condos for sale in the state represents 7.4 months of supply, double the inventory rate for all homes, and well over a balanced market of about 6 homes that is pushing prices lower. Nicholas Gurley, CEO of real estate analysis firm Reventure, is also calling out a trend called boomerang migration, where millions of people flocked to states like Florida and Texas during the pandemic, but are now moving back, creating a wave of homes for sale. Existing home inventory for sale in the South jumped 48% in June from just a year earlier. So that increase in homes for sale is starting to weigh on prices, with Zillow reporting that 1 in 4 sellers cut their asking price last month. The monthly growth in home values rose at its slowest pace in 14 years in June, and could be about to turn negative. And while that jump in unsold homes and weaker prices could hit homeowners, it, along with falling mortgage rates, is going to spur a wave of the number of homes for sale. Mortgage rates dropped to a 15-month low last week, down to 6.5% on the 30-year fixed mortgage, and caused a surge in refinancing. Folks, people love to move, but haven't been able to because of rates or prices over the last 2 years. That's about to change with the Fed rate cuts, increased inventory for homes for sale, and lower prices. The housing market is about to flip to a buyer's market, and that is going to be great news for a group of stocks. Zillow, ticker Z, was the big surprise last week, reporting strong growth in services demand and beat expectations, with revenue up 13% from the last year. The stock surged 19% on news along with a change in management. The Zillow mobile app and its sites had 231 million average monthly users, with visits up 4% to 2.5 billion. Revenue growth is expected to accelerate to 13% next year and for earnings to jump 42%. But if this trend comes through, it could beat even those expectations. That said, Zillow may already be pricing in this trend and is more expensive than its competitors, like Redfin, ticker RDFN. The online marketplace is quite a bit smaller at just 52 million users, but is also expected to see revenue increase at a double-digit pace next year. Earnings should also improve, but are still expected negative on this one and trading for a much cheaper price of 0.8 times price to sales, compared to 5.5 times the revenue for shares of Zillow. Redfin also provides title and settlement services along with its mortgage business, which should all benefit from this increase in sales transactions. Compass Inc., ticker COMP, operates a cloud-based platform with an integrated suite of software for agent CRM in the industry, so this is more or less direct, more of a picks and shovels play on that increased brokerage activity. Revenue growth is strong with this one, expected up nearly 14% next year, and for the company to report positive earnings, which could help boost investor sentiment. Shares are even cheaper here at 0.41 times sales, but again, movement on this one could be secondary after we see that increase in revenue for brokerages and on their increased spending on services like Compass. We're into the penny stocks here with $474 million market cap, Anywhere Real Estate, ticker HOUS, a global compilation of brands including Better Homes and Gardens, Century 21, Coldwell Banker, and Sotheby's. Growth of 8% expected next year is the second lowest of the group, but earnings are expected to turn sharply positive, and the shares are trading for the lowest price multiple, around 0.08 times price to sales, which might make this one worth the risk. If the housing market does see that surprise increase over the next year, shares of Anywhere could see the biggest bounce on those lower expectations. And the smallest stock in the group, Remax Holdings, ticker RMAX, at just $287 million market cap, franchises its name to brokers across the US, Canada, and internationally, as well as providing related services for mortgages. Expectations are the weakest here, with a revenue expected up just 0.8% next year to $311 million, though earnings per share are already positive and expected up 7% for the year. Shares are relatively cheap here at 0.5 times revenue. If the trend does develop, it could definitely surprise this revenue higher on those low expectations, but I kind of wonder if growth is limited somewhat because of that franchise model. Looking at the stocks I'm watching this week, Alibaba Group, ticker BABA, is going to be reporting its earnings on Thursday with some very good news lately boosting the shares. The e-commerce leader has developed a strong AI model through open sourcing and is starting to integrate that in with the sourcing agent tool in September. Global e-commerce has been one of the fastest growing segments for the company, and this should help further along. The shares also got a boost late July on rumors that Baba would start charging a software service charge for its merchants on its Tmall and Taobao platform, also starting in September. Rivals PDD and JD.com are already doing this, so there's not likely to be much customer pushback, and it should add to revenue. The stock is trading around $80 from a low of $68 in April, so some of this news is priced in, but it's still cheap at just 1.5 times sales, with revenue growth of 9% this year and 8% next. Now, I expect management to raise its revenue outlook on Thursday earnings and confirm some of that recent news. I have call options on the shares as well as the stock itself. Walmart, ticker WMT, also going to be reporting its earnings on Thursday and will be the ultimate measure of consumer spending. Year-over-year revenue growth was just 6% in the last quarter, with expectations for 13% full-year growth this year, so I'm afraid the retailer is going to guide revenue lower on that potential for a slower consumer spending. Now, part of this would just be that earnings game companies play, trying to lower those expectations so they can beat them when they report, but it could also spook the market on the health of the consumer, which is more than 70% of economic activity, along with retail sales, which are going to be reported that same day, and an already jittery market on economic worries. This could be the news that tips us into another drop for the week. Also here, AI software stocks seem to be suggesting the theme is developing into that next wave, where instead of the AI infrastructure plays like Nvidia, it's the software services stocks that will lead higher. Several of these companies reported blowout earnings last week, including Palantir, up 32% on the week, lender Upstart up 45% on its report, and SoundHound AI up 21% when it reported. Here I'm developing an AI software stock list to watch and shared it on our Facebook group as well as the channel last week. Baba has started to look like its model is improving the outlook. IBM had its best day in years when it reported higher revenue on its AI services. Next to watch would be C3.ai, ticker AI, which reports September 4th. The stock has been a constant disappointment, but could surprise to the upside on this new trend. The Amelia acquisition by SoundHound looks like it's going to be a very strong addition, expanding SoundHound into retail, financial services, and healthcare. Even on the 20% pop, the shares are still a good buy here, under $5 each, and it's probably my favorite on the list. But let me know which AI stocks you're watching in the comments so I can add them to this list. Especially software as a service stocks. Those are really the ones I'm watching. Looking at the bigger picture here with the SectorSpiders.com sector tracker, 5 of the 11 stock sectors did close higher last week, with the bull market leaders, technology, and communication services rebounding. Now that is a good sign for the stocks that have worked over the last year, even if it wasn't enough to drag the overall market higher for the week. 2 sectors that were exceptional in their sell-offs, though, were materials and consumer discretionary. Nearly all 22 of the 28 stocks in the materials sector finished lower. This sector hasn't performed particularly well this year, so it wasn't simple profit taking, and investors might want to avoid stocks in the group on kind of that broad weakness. Also, more than half, 32 of the 52 stocks in the consumer discretionary sector finished lower, with the group down a full % on the week. Generally, when you see other riskier groups like communication services and technology do well, this discretionary sector also rises, but the fact that it sold off shows how worried the market is for the health of the consumer. Now, Thursday is going to set the mood for stocks in the group with earnings from Walmart and that retail sales data. If the data shows a relatively healthy consumer, then I would start looking for bargains, as these 52 stocks in this sector have fallen 2.5% this year to date, and some are attractively priced. If Thursday's clues point to weaker spending, though, then we're likely to see more weakness not just for this sector, but for much of the market. It will be an important week for consumer prices and spending, with the ever-important CPI report on Wednesday, followed by that retail sales reported on Thursday. Both of these will affect the Fed's decision on how much to lower interest rates when it meets on the 18th of September, as well as the mood of the market until then. Now, there isn't expected to be much change in the Consumer Price Index, that CPI measure of inflation, when it comes out on Wednesday. The headline rate of 3% is expected to match last month's, and the core measure, so stripping out volatile food and gas, is expected at 3.2%, which is just 0.1% off of last month's 3.3% pace. Inflation has been coming in under expectations for the last few months, so there is a chance it does so again, but most likely it's going to turn out to be just a non-event for the market. The bigger news could be retail sales reported Thursday, with expectations for just 0.3% in July versus 0.4% the prior month. Now, other data points like consumer credit and employment have shown weakening lately, and I wouldn't be surprised if retail sales disappoints on the downside, adding further proof of the economy's slowdown. Lately, the market has been taking this bad news badly, selling off on a recession fear, so Thursday could set the tone for the market. Get monthly dividends and long-term returns from rental properties and the Arrived Homes platform, but make sure you get on the notification list with the link below, or click on the video to the right for the 4 monthly dividend stocks that pay you every week. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.